Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about Disney stock. And this is an interesting one because the last time that I actually covered Disney was 1 year ago today, and the stock price on that video was $104 a share. So if you actually look at that price line, it was actually right around this time period. I think it was a year ago today, because it was $104. It had a little dip and then it kind of flattened out. And we've seen with each progressive earnings, it's continued to go up. And the reason for that is because what they've continued to do is to emphasize that their cash balance has continued to stay on a positive trajectory. So as they've continued to have all of these huge increases in expense associated with workers not coming in, they've begun, unfortunately, however, for the benefit of the business, offloading a lot of workers and making appropriate business decisions to make sure that they stay completely in control of their financial situation. The other thing, and we really saw this last August, that's where you see this jump right here, is they are rapidly bringing Disney Plus to the forefront. Again, they've got like 90 million members right now. I believe the last official number was 87 million, and that's what we're going to be looking at for their next oncoming announcement. So the reason we're talking about earnings now, as opposed to a little bit closer to their earnings date of May 13th, is because one of their peers announces earnings tomorrow. You can actually see Netflix right here directly next to them. The reason why this is so important is because I currently have outstanding call options on Disney at the $200 price point for 2 weeks from now. I'm just looking to do a flip on those, or I may build those into a debit spread. What I'm looking for here is I anticipate that Netflix is going to announce numbers that are generally speaking going to be positive in terms of their overall usage. However, they are probably going to forecast forward that they don't anticipate necessarily having additional or the same level of growth that they have over the past 12 months. Understandably so, as the United States economy continues to open back up, people are going to stop sitting in front of their TV watching Netflix and Disney Plus at the same level that they have. However, if that is their guidance, that is generally positive for Disney, because Disney is going to be announcing the reopening of a number of their theme parks, hotels, and cruise lines. Now, they've already said they don't intend to have their cruise lines reopen until later this year in June. So that is one of their business lines that they are not going to have up and running. However, they do have strong fundamentals that are leading into this next earnings cycle. So you can look at even some of the net income here. They had a positive Q1 last year. Again, they are not necessarily on the same fiscal year being the 4 quarters that you announce your earnings. So this is actually going to be Q2 for them. But we're going to be looking at this in another 3 weeks, and what we're going to be looking for is the state of their theme parks, as well as some of these outstanding movies. They pushed off a lot of development. You have to remember that Walt Disney does own Marvel, as well as a number of other studios, but they've pushed off a number of those movies into this calendar year and into 2022, and I anticipate we're going to see that begin coming in this calendar year. I do want to highlight from an annual revenue perspective, you can see that there was only a marginal decrease between 2019 and 2020, right at $4 billion, which is pretty crazy to say that in a marginal place. But they were profitable in Q1, and I anticipate they're going to be profitable this quarter as well. Now, the thing that we're going to be looking for is, can they restate their dividend in the next 2 years, which again, they have a very strong cash position. If we go back into the balance sheet here, they still have nearly $17 billion in cash. So what we're going to be looking at, and I'll showcase the quarterly view there. So they still have $17 billion in cash. What I'm looking at is not just the dividend reinstatement, although I do anticipate that that will come in the future, but we are looking for active revenue growth, and what are going to be the catalyst for that. Again, some of the items I'm looking for is the reopening of those parks, because I think from a recreation perspective, that is going to be bullish as the country begins to reopen. The other thing that I'm going to be looking at from a overall bullish perspective is going to be the Disney Plus numbers, because those are obviously going to be important as they continue to change into a overall development studio and not just trading at theme park multiples. That's really what I want to highlight when we look at some of their valuations and why I still think that they have quite a ways to go. You can see from a price to sales perspective, and they currently have a negative price to earnings because they didn't make a profit. But from price to sales perspective, look how much lower they're trading than the industry. If we go back to these analyst reports, which this, not the analyst reports, but the peer comparison, which is not a 1-to-1 ratio, you can actually look at some of these changes here. Well, just the price to earnings, but Netflix is trading at an insane PE ratio. However, if we go into the Netflix summary, we can look at some of their valuations. So their price to sales ratio is nearly 10x, whereas the overall price to sales ratio for Disney was at a 5. If you trade at that same multiple, then Disney is going to be looking more at the anywhere from 230 to 250 range. That's where I think that we're going to see Disney by the end of the year. That's what I'm going to be looking for. So do I think the shares are a good play? I do. However, I also am going to be looking at some longer term call options. Right now I'm playing it short term, looking for an earnings run up before I flip out of them. But I still think long term there's still potential there. But depending on the day, which today probably would not have been too bad, but they can be pretty expensive. The reason for that is because this industry right now is trading at very high valuations. And I think that Disney has the capability to maintain some of those high valuations because they have strong fundamentals that are currently backing the company, where if a disaster were to happen, such as a COVID-19 scenario or a pandemic, they do have enough cash on hand to be able to wade through that, similar to how they did over this past year. So these are some of the reasons why I am bullish on Disney. Keep in mind, I'm just not a financial advisor. This is all just my opinion, and I'm some guy on YouTube, but I think that we have a lot of capability to play Disney going into the Netflix earnings tomorrow, and then Disney will be announcing their earnings in another 3 weeks. So if you have any questions, feel free to join the Discord. Ask me there. I am much more responsive there, and I can go a little bit more in depth. Or if you have anything for this channel, then feel free to comment down below, and please leave a like and subscribe. Thanks for watching, and I will talk to you later.